you flip back over to the daily and especially look at what the soybeans did today, it was pretty wicked.
Hi again, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. As always, I want to remind you, make sure you like these videos, subscribe to the videos by clicking on the bell icon, and share these videos with others too, as we continue to grow into one of the fastest growing ag podcasts out there with your help. And check out our premium content too. We have some special reports in the morning, and those you can get on a free trial for, well, not a free trial, just $1. Almost free for a month. One of the contributors happens to be my guest. We have Relph of Comstock Investments with us. He happens to author some of that stuff in there. And actually, Eric, you put out a morning video every day, don't you?
Every day, yeah. Well, every market day goes about 5 to 7 minutes and just covers what happened in the overnight, what maybe some of the major influences were today. Talked about the anthrax scare in the cattle market yesterday. Just touch on some of those things that maybe are flying under the radar. I always try to cover the cash cattle market and try to keep people up to date with the things that are maybe a little bit harder to find. And so, yeah, it's I think it's a good deal. Everybody seems to find good value in it.
Okay, Eric, as we wrap up the trading week here, it's a short trading week, so everything was kind of compressed a little bit. You know, I was working on some stuff. I looked at the markets earlier in the day, and everything was in the green. Everything looked good. Grains were higher, livestock were higher, energies were higher. And then I see at the close where it's like everything just totally flipped. What in the world happened on Friday?
Yeah, you know, we use a term macro meltdown, and this was definitely one of those. It was led by a stock market pullback, which was spurred by the jobs report that came out this morning. And anytime you see this kind of reaction across every major sector of the futures market, and I'm not talking about just commodities, I mean every major sector of the futures market, it's usually not very long-lived. Usually there's an overreaction initially, and then people wade through the mud and figure out what's what, and then figure out where they want to re-enter at that point. So this may be nothing more than a buying opportunity in a lot of these markets. Some pretty significant support has held in some of these sectors, but others have broken through that support and will struggle to find any footing at this point. But all in all, I think it's a bit of an overreaction. I just don't know how quick we recover from this, and maybe the idea that this jobs report revisions from June and July, and then the worse than expected August report pushes the Fed to make a 0.5 point cut later this month, and maybe that will give a little euphoria back to the market.
Is the trade finally waking up to the fact that they always do revisions and it's always in the wrong direction? I mean, they've been doing it for at least 1 or 2 years, right?
Yeah. I mean, really, since the jobless claims really started elevating post-COVID, you didn't see the realities of it for a couple of months, and then all of a sudden you had people filing for unemployment left and right, especially when they increased the benefits. And then it's almost like the data was overwhelming and it couldn't be consumed fast enough and analyzed by, you know, what I assume is some pretty massive processing capabilities that the government has. And ever since then, it's been revision, and it's usually, like you said, a negative revision. But I think they expect it. I just think we're kind of hypersensitive to stuff here 2 months from an election.
So it used to be, and it was kind of an inverted philosophy, wasn't it? When you had like poor jobs data, wasn't that a good thing for the equity markets? I mean, it was everything seemed upside down to me. But now it doesn't seem to be the case anymore. What happened there?
Well, we knew interest rates were going to go higher. We didn't know how much higher or for how long. Now we know that interest rates have stopped going higher. That much has been made clear by Jerome Powell and all the Fed presidents and everything. So we know we're not going higher. So now we're back out of this environment where bad news is good news, because we're not continuing to increase the interest rates. So now, until we get on a downward trajectory, which so far we're not, but hopefully later this month we will be with regards to interest rates. Until we get on that downward trajectory, I think the market's going to continue to treat bad news as bad news. And then it's going to be what the rhetoric is surrounding some of their rate decisions and their thought processes moving forward. There's going to be a lot more traded based on what Powell says than what the Fed does later this month.
We'll get to livestock in just a little bit here, but I did see where it followed the equity markets to the downside today. First, I want to cover this grain market here. As I mentioned, when I looked early in the day, things were looking pretty strong. And then that was a very nasty close when you look at it. We didn't have a lower weekly close, did we? Or did we?
Actually, I have not had the opportunity, as we're recording this just 20 minutes after the close, to see what that weekly chart looks like. But bear with me just a second, and I can kind of look at a couple of these details and see here. So, yeah, it was not a lower close for the week on the November beans. And it shouldn't have been for the December corn. No, December corn was in good shape. So no, not a lower weekly close, but you flip back over to the daily and especially look at what the soybeans did today. It was pretty wicked. You had an outside day lower, but I guess you could hang your hat on. We didn't take out this 23-day exponential moving average at 1002.5. And that's one that is pretty highly followed by the algorithms and stuff. And that held so far. You've got psychological support at $10. You've got this moving average support at 1002. I had a lot of people looking to buy in that 1002 to 1005 range. Some of that got done late in the session today. So not a terrible deal, but yeah, it's not good looking on the daily chart for the beans.
Now, on the wheat, it looks to me, I'm looking at Kansas City, December right now, and it looks like, it's a lower close for the day and closed either at or close to the low of the range of the day. Mm-hmm. But it is still above the 50-day moving average. I guess that's one sliver of hope there. We have been watching like the 100-day moving average there, haven't we, for a resistance point or maybe a retracement or something?
Yeah, I think that the wheat market is probably going to try to target some of these higher levels as long as we don't break down support, which that's going to be contingent on what the global market is doing with regards to Russia and the EU wheat markets. But we had advised, I actually took some long profit in wheat just yesterday, and then we advised officially to make some sales in the wheat market this morning. And I'm glad we got that done because we did hit the targets that we wanted, and then, of course, finished 12, 13, 14 cents off of those levels, depending on which class you were looking at. So there is some new hedge pressure coming in. There is some long liquidation going on for those that did bottom pick it correctly. That runs out pretty quick, though. That can be a 1 or 2 day deal, and then see what happens from there. And hopefully we'll get the fundamentals to support some other kind of a rally to where we can get some more sales booked for this new crop.
So that right there kind of underscores the importance of the premium content because, like you alluded to, you guys had made that recommendation for our premium customers, and look what the market did after that. Mm-hmm. So
yeah, you don't always hit them like that, but yesterday, today, it was definitely one of those.
Okay, here we are with corn around 406 or so on the close of the week. Harvest is really picking up in intensity. I know there's a lot of harvest activity in the Mid-South going on already. I did hear of some dryland corn in the Central Plains that's coming out now. So things are starting to get pretty active. We talked earlier this week about the wide ranges in basis now, depending on where you are around the country there. It's kind of like the Wild West, isn't it?
It is, and it can change day to day at the same end user's location. I mean, they're pushing these bids, and they're trying to acquire a certain amount of grain, so they push the numbers and give something to the market that's kind of appealing, and they'll get all of it in, and then they pull it off. They're offering it and filling the orders within 3 hours, and then the grain's coming in over the next few days, and they get what they need for the time being, and that's. It's pretty typical when you're this close to harvest. People get a little too close to the knife, and then they have to go, oh crap, I better get something done here. And so we're seeing a lot of that. And you're seeing it from hog operators. You're seeing it at feed mills. You're seeing it at ethanol plants. It's kind of everywhere. I've heard several things from all the way from San Antonio, Texas, up to central South Dakota, whether it was corn yield or silage yield appraisals or whatever. And everything has been kind of average to disappointing. You talk to one person and it was about average, but in July, they were expecting quite a bit better than average. And so it was disappointing in that regard. But these silage appraisals that are coming in our region, the early stuff's being chopped right now. They're pretty disappointed. There's a lot of holes in the field from that early flooding, so it'll be interesting to see how that plays out over the next couple of weeks.
Did I hear correctly that in the 3I states there seems to be an uncomfortable amount of on-farm storage of the old crop yet?
That's what they're saying. I can't verify from our book of business that that's actually reality. My statement for a long time has been, I have a lot of clients holding some, but nobody holding much. And with very few exceptions, that's the way it kind of is. And I have a couple of people that are holding at or near 100% of their old crop, and just figured out different storage methods because they're gonna try to weather the storm for another season if they have to.
Well, we changed the calendar over into September, and it seemed like that meant the funds were taking the profits on the short positions that they had when we got to the end of August there. And that maybe supported the first 2 or 3 trading days into September. But now I wonder, we have another WASDE report coming out next week. And I just wonder if that is putting any influence on the market right now. What do you hear? What are the thoughts about that upcoming report?
Well, I think it does give some angst to producers and to traders, and they always kind of want to do something ahead of it. And so, well, we've had this nice rally. We got that report next week. Maybe we should go ahead and get something done here. And you start to see some selling pressure as a result of that. The September report is usually kind of a dud. And the one that really matters is the quarterly stocks report at the end of the month. And so I'm curious to see if we're actually going to see any real change here. The USDA does change their methodology a bit for this report. And so it'll be interesting to see if they change their numbers at all. I do not believe that an upward revision is warranted by any stretch of the imagination. And I wouldn't expect a change in the soybeans, but I would expect some kind of a downward revision from the last report in the corn market, specifically on the yield number. Whether we get it or not remains to be seen, but that's something that wouldn't surprise me a bit.
Well, what if we don't get it? How much damage could it impact on the market?
I really don't think it'll be much if we don't get it. I think it's one of those things that maybe it's a possibility, but the trade won't expect it, and we'll wait and see what those trade expectations are come Tuesday next week. But as of right now, I don't think anyone's expecting it. I just wouldn't be overly surprised if they did drop it a half a bushel or something from the last print that we saw.
Okay, now let's go ahead and turn our attention over to that livestock trade here. Pretty
Can we
sizable
not?
losses here in livestock across the board as we wrapped up the week there. Is it just kind of shackled to the equity markets now again?
There couldn't have been much bleed through selling based on the anthrax report that came out yesterday, but yesterday it got hit in the head pretty good. The cattle did, based on a report that there was anthrax in some cattle in Wyoming. And I guess if I understand the way that played out correctly, and I apologize, I didn't read the details as closely as maybe I should have, but I believe they found a dead moose that tested positive for anthrax. And so they immediately went scouring the cattle in that region, and they did find one cattle herd that tested positive, and of course they vaccinated. And anthrax is something that's been around for a long time. I can remember my dad and grandpa talking about it when I was a little kid, and probably 35 years ago, talking about vaccinating for anthrax because some neighbor had it, is that kind of thing. It's in the soil, and it's just whether or not it ever gets activated in a specific region as to whether or not we have to contend with it. But the wildlife and the livestock can carry it around. So anyway, that hit us yesterday. But I think yesterday we kind of we took the blow and then simmered down a little bit by the time we closed. And then today we were doing fine and actually trading $1, $1.25 higher in the feeder cattle, while we were 50 cents to $1 higher in the fats. And then the stock market goes into meltdown mode, and the cattle just followed. And so today that was the case. But really, we haven't been. I actually made a comment the other day that the cattle were steady to higher while the corn was up really nicely and the stock market was down pretty hard. So that would have been on Tuesday when that happened. And that's just, to me, that was a sign of a strong market. Well, then you get a bad headline, and then all bets are off. And in the midst of all that, you're trading $2 lower Fed cattle cash. everywhere in the 4 reported feeding regions, whether it was live or dressed. We're another $2 lower this week at 181 live and 288 dressed. And so there's really just not a lot to hang your hat on right now to think that this cattle market has some any immediate signs of life.
Looking at a live cattle chart here, it looks like the downtrend, though, on a daily chart is still intact. It looked like it was maybe going to make a run at taking that out. It couldn't get it done, and it just bounced right back away from it again.
Yeah, and unfortunately, that's the struggle we're having. You know, I was asked by some individuals and then made a comment a little more publicly that I was asked how could I be negative the cattle with the fundamentals like they are, and I know they're referring to the number of cattle that are out there, and I said, you've got seasonally here, you've got a downturn in the beef, which we've seen so far for the last couple of weeks. So you're continuing with that. At the same time, you've got Bohling calves coming to the market in droves over the next 30 days. This is just the time of year when those start coming to town. And that always puts a little pressure on the feeder cattle market. Lower beef puts pressure on the live cattle market. And every time we have a little hiccup in the way things are shaken out, years ago, we used to get dinged for heavier carcasses. Then the packers figured out they can logistically process less cattle, still get the same amount of beef, so they quit penalizing for it. And then they started offering some premiums for it. And so what's happened with this reduction in our cattle herd here in the U.S. is it's just made the packers figure out other ways to get the beef on the shelves. And they're importing more, they're exporting less. The 50s have gone through the roof because they can blend that down with the leaner cattle or the leaner beef that they get from other countries, whether it's in cattle form or in beef. And they're bringing a ton of feeders in from Canada and Mexico. It's just they figure out the loopholes, and if the domestic supply isn't going to give it to them, they're going to figure out another way to get it.
Well, feeder cattle futures look like they're whistling past the graveyard here. I mean, it's getting kind of spooky close to the bottom of that market here in a recent move.
It is. You know, if we don't hold here in the next $1, $1.50 in most of these feeder cattle contracts, we could have a real problem on our hands. I would look for that to hold at least short term and provide some kind of a retracement rally. But right now, it is a little scary close.
Meanwhile, on the hogs, things look a little toppy over there, but we are still above the 100-day moving average. We dipped below the 200-day, but we're above the 100. Do you look at that as more of a correction in the hog market, or do you think a top is in?
I think we could have a little bit of a harder breakback to actually call it a correction before we could see another rally out. But I don't think the hog market's done by any stretch of the imagination. These deferred contracts are just at such a deficit to what our prices are today that I think there's still some room to gain in those.
All right. Well, it's good to visit with you. I appreciate all the information again as we wrap up another trading week. And safe travels. I see you have the KC hat on. I understand you actually got to partake in the football game this week.
Yeah, I went to the season opener for the NFL and for the Chiefs last night, and then figured if we're going to make the trip, we may as well make it worth it. So we'll go catch a Royals Twins game tonight. They're both vying for second place in the AL Central, so we'll see.
Interesting. And for those that don't know, Eric did grow up in Kansas, just like I did. So that was our kind of our quasi home team.
Since we don't have one in Kansas, we had to pick between Denver and KC, right?
Right. Yeah. It's a long drive either way. So anyway, travel safe. Hopefully I'll be able to talk with you next week in the office, and we'll compare notes right before the next WASDE report, if we can. So that's Eric Relph of Comstock Investments, and that'll do it for this episode. Thank you for joining us. For producer Brianne Hendrickson, I'm Marlin Bohling, and we will catch you next time on the Comstock channel. Thanks for joining us on our Comstock YouTube channel. Don't forget you can also find us on Facebook and TikTok as well. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.